Hello traders, greetings to each one of you. Welcome to my website and congratulations for well receiving this product. This is my most precious gift for you finally. This is King of Forex from the 1% Club. In this video I'm going to give you the whole secret of Forex trading. How we, the 1% Forex traders, trade the market every day. How the most successful 1% Forex traders trade the market on daily basis. And why 99% of traders are losing while only 1% are winning. First of all, I will start with the secret. The secret is made out of, it's a statement made out of 6 words only. And I will say it and I will be writing it. The secret is the following. Pay attention, listen carefully. 99% seek winning, 1% seek failure. I repeat, 99% seek winning, 1% seek failure. So I will write it down. %99 seek winning and just 1 second. That's it. 99% seek winning, 1% seek failure. As you can hear and as you can read, I know it's a shocking truth about Forex trading. How is that? The 99% are the losers in this career. How the losers, since they are seeking to win, how they end up losing? And on the other hand, how is the 1% successful Forex traders, since they are seeking failure, why they end up winning and winning big? Of course, everything is revealed in this video. But just to make you understand it, imagine when you are going to the gym and you want to build the right muscles. What are you seeking exactly is failure. You will be making, let's say, the biceps. So you will be training your biceps. First time, up, down, second time, third time, 10, 11, 12. When do you stop? When you are really tired, when you cannot elevate your hand anymore, when you cannot even use your hand anymore. So actually you are seeking failure. You want to fail in this biceps training in order to build your biceps muscle. So in this sense, the same sense which is also in the whole life, you have to, or actually to be in Forex trading, to remain in Forex trading, you have to be, or the 1% are seeking failure in this sense to win. Okay, so everything is going to be revealed. Watch it till the end. First of all, I will start with the chart. How to set up the chart. That's it. It's a pure, clean chart. New chart. First of all, you go to properties, and I always prefer with the 1% prefer this one, the black on white. Okay, with the common show as line, show OHLC, open, high, low, close. These are opening price, high price, low price, closing price of any candle, of actually the most recent candle. Show period separators, so for example in the daily or in any time frame you will know that the period has ended. Remove grid, and also in colors you can also choose the color of the candles. For example, a bar up, you can make it, it's very famous to make it green, and also bar down red, so you can change it from here, and also bull candle green, red, bull candle green, and bear candle red. So I will make it also in this way. So bar up green, instead of searching for it you can write it green, bar down red, bull candle, look how the chart is changing, bull candle green, bear candle red. That's very professional with these comments chosen. Okay, so that's the chart. You will select this one, candlesticks, and also from properties, from here, instead of bar chart or line chart, select candlesticks. Okay, from properties. Okay, perfect. So the chart now is available in front of us. Click on this one to see the bid and ask price. Okay, it's faster to buy and sell from there. And now you have to place your indicators. First indicator is volume. So you go there to volume and volumes. Nothing, default settings, just click on OK. That's the volume. Then you will need the moving average applied to volume, which is EMA 20. So what you do, you go here to the navigator tab, you keep scrolling down to find moving average, this tab, moving average, or you can find it below trend. So indicators, then trend, then moving average, or sometimes directly indicator, moving average. So you click on it, you drag it till the volume indicator. You release the mouse here. You choose period 20, MA method exponential, apply to first indicators data, not close, and I choose the red color. You can select a different color. Click on OK, and that's it. Now EMA 20 is applied to your volume indicator. Then you will be selecting moving averages one by one. Let's start with this one, 20 exponential, close, red. Perfect. Other one, 50 exponential, blue. That's it, blue. Also, moving average 9. I choose a purple color, which is here. Either medium state blue and okay, this one is perfect. Medium state blue is a good one. Of course, you can choose any colors that you want. The last one, 200, I always prefer it to be in green, lime green, exactly. So here we are. Let's check them again. 200 exponential close, lime green. 50 exponential close, blue. 20 exponential close, red. And this one, 9 exponential close, medium state blue, with volume indicator and EMA 20 applied to the volume indicator. That's the chart. Now you can start trading. That's the full setup. So now you have learned the secret in this statement at the start of this video and the idea behind it. And now you know the full setup that you need to start trading. So what you need in the moment is, of course, the gold, which is the strategy. Pay attention carefully, focus, leave everything in this moment, just focus on this video. Okay. So, first of all, we're going to start from there. Let me explain it very clearly. EMA 200 is the baseline. EMA 200 is your reference. EMA 200 is a secret by itself. We are on M1 time frame. Pay attention on 1 minute chart. You can use it, you can trade it on any time frame, of course. But on 1 minute time frame, it's preferred because you will have lots of opportunities. You will be entering lots of opportunities, and these opportunities allows you to make lots of profits if you are using very well the strategy. So on 1 minute time frame, you will have lots of opportunities. You will have lots of convenience, peace of mind. Your orders are not open overnight when you are sleeping. You don't have swaps for the next day and also the next week. As you know, the swaps are tripled 1 time per week. And everything for M1 is the preferred. But you can also trade it on other time frames. So let's continue. We have EMA 200. Okay, EMA 200 is the baseline. Pay attention. Everything starts and ends in EMA 200. So the market is divided into phases. Each phase starts from EMA 200 and ends on EMA 200. Okay, so let's see it here. This phase started from there. Okay, the market trended down, reached EMA 200 there. This phase ended here. A new phase started there. Again, ended here. New phase, ended, new phase. Here the price was many phases, because actually each phase is 1 candle almost, so here it's nothing. From there, new phase, end of this phase, and a new phase again. So each time, new phase, this one, a new phase of the market. This is the end of this phase, okay? So the market is divided into these periods, and each period starts from EMA 200 and end on EMA 200. That's clear? Let's continue. In each period or phase, the market will either be going away from EMA 200 and returning immediately, or going away and taking so long to return. Sometimes hours and sometimes in minutes. So you don't have a rule for the market that it should be returning to EMA 200 within 1 hour. No, it's not like that. The market will get away from EMA 200, either from up or from down, below it or above it, and will return sometimes in minutes, sometimes in hours. It depends. Okay, we are talking about M1 time frame, of course. On the daily basis, daily time frame, it takes longer, and of course that's logic. Okay, so the timing of the market, the timing of these phases, these periods, when to start and when to end is not specified. Sometimes it's long, sometimes it's short. And during these, or each period of the market, either it's a trend, the market like here was trending down, or it's a consolidation or a ranging market. The market is going like that and then returning, and then going away and returning, okay? And sometimes trending like here. That's all what you need to know about the division of the markets, the parts of the markets. When you know the whole secret, so in the upcoming of this video, you don't need to analyze the chart. Imagine how powerful it is. You will not need to analyze the chart. Am I in a trending market or in a ranging market? Because that's very hard to analyze it. When you know the whole secret, you will not think about ranging and the trending market. Just think about it, how powerful it is. Let's start. So I will start now. From now on, focus as much as possible. Put all of your focus, 100% focus. I will be explaining step by step the full guide, how to buy, how to sell, when to close, everything of this strategy. Pay attention and watch. When the candle or the price start being away from EMA 9, I repeat, when the price is away from EMA 9, for example here, if you take a look here, the price is away from EMA 9. Here is your entry. So, when to enter? Whenever the price is away from EMA 9. When to close? Either you will be closing on EMAs, either 9, 20 in between. So, your close is on EMAs. Okay, that's clear for the moment. One remark which is very essential: why EMAs are used in the whole secret. So you can understand why we are using EMAs before we continue. Now you have learned when to enter, and you will enter when the price is away from EMA 9. You will be exiting when the price is close to EMAs. Okay? Of course, I will be explaining step by step. Just focus why EMAs are used. Why? Because, as you know, forex trading is divided into two major parts, which are technical analysis and fundamental analysis. In technical analysis, all of the indicators are made out of moving averages. If you take the stochastic, for example, or any RSI, every indicator is made out of the sum divided by the number, which is the moving average. Okay? Every indicator has a unique mathematical equation, and lots of the indicators are made by mathematicians. So, therefore, every indicator is made out of EMAs. Once you are using EMAs, or actually MAs, simple moving average, basically, once you are using moving averages, you are almost using all of the other indicators, because the other indicators are made out of moving averages. Why we use EMA instead of MA, simple moving average? Because EMA, the exponential moving average, is much faster than the moving average. So, the exponential moving average is much faster following the price. And in the most present candle, we need the fastest EMA to be giving us the fastest signals and fastest results. Okay, so that's why we use exponential moving average, because in its mathematical equation, mathematical calculation, the exponential moving average gives weight to the most present candles, and therefore it's much faster than moving average. And of course, trading is a quick market. You need to make quick decisions, fast decisions. So EMA, exponential moving average, is much more suitable than simple moving average. Okay, so now everything is very clear. Let's start straightforward. Like here, price is away from EMA 9. I have to enter. Is it a buy or sell? So keep focusing. Now I am revealing the whole strategy. Price is away from EMA 9. Should I buy or sell? Here I should sell. Why? Because price is below EMA 9. So let's write it to understand it. First of all, price below EMA 9, away, making a good distance with the distance, okay? not just below it, so you need some distance. Okay, in this case, you sell. Okay, so price below EMA 9 with distance, you sell. Also, price above EMA 9 with distance, you buy. You enter your first order. Okay, it's clear? So here, price is below EMA 9, I sell. Here, price is above EMA 9, I buy. You just want some distance, sometimes little, sometimes big, okay? Of course, with practice, your timing will get better, but it's not a big deal. So, whenever the price is away from EMA 9 from below, you sell. Here is your first selling. If the price continue going down, you sell more. If the price continue going further down, you sell more. So, first sell, second sell, third sell, let's say fourth, okay? Last sell here. When to exit? As explained before on EMAs. When the price return, pay attention here. Since you are selling and selling and selling and selling, and the market is moving in your way, so you are in winning. And since you are seeking failure, you don't want to close here in your winning. You don't want to close on your winnings. You will be waiting for the price to reach EMAs. Obviously, the price is going to reach EMAs sooner or later. The price here reached EMA 9. If you are in a losing state after the price reached EMA 9, you should close. So you are in a winning state, you keep it. Because you are seeking failure. Remember what you have talked in the first. You are seeking failure. You don't want to be winning here. I know now it's conflicting, but just keep it with me till the end. You are selling, you are in a winning trade, you are selling more, you are winning. Okay, you don't want to close on your winnings now. You are seeking failure. Since the price returned to EMA 9, here you will be looking at your profits. If you started to become in a losing state, so if your profits are negative, immediately close on EMA 9. If you are winning on EMA 9 still, don't close. Leave it. Then the price returned down, you will be selling more here. Then the price returned to EMA 9, you don't close. Then the price returned to EMA 20, you don't close here because obviously here you will not be on losing. Because if there, you didn't lose. How there? Okay? So, price returned toward EMA 20. Here you will be looking at your profits. If your profits are negative here, you will close there. Okay? And then, let's say your profits also there were positive still. So you remain. You wait for EMA 50. And then you wait. The market trended down further. Maybe you add a sell order here because it's slightly lower than this one. Also, the market returned, but you are still on winning. You don't quit. You don't quit. You sell. You sell. You sell. You don't quit. You sell. You don't close. And then here, imagine all of these are sellings. So when the market reached EMA 50 here, you are already in a very big amount of profits. Okay? So now the market reached EMA 50 here, and here you are still in profits. So following the strategy, you don't have to close here, but pay attention. Since this phase, this period below EMA 20 holded lots of time, let's say from almost 1 hour, and more than 1 hour, you can close your orders here with a big amount of profits. Okay, so you can close it here. In this case, you are quitting early on, but that's perfect. You have seen that you have made lots of profits riding this downtrend, and you said that since the price for a long time didn't reach EMA 50, I will be closing on EMA 50, and finally here you will be closing on EMA 50. Okay? But here you have closed just for one reason, because you saw that you have made lots of profits, which is great for you. You said enough. Maybe the price will be going upward more, so I'll be losing some of these profits, and I want to close there to make sure these profits are in my pocket. Okay, so that's a logic to close there. Also, if you want to apply the strategy step by step, you will be waiting here, because you are not in a losing state. You will be waiting, and pay attention. You are in this phase, so always you have to pay attention to the last of the phase and the beginning of it. So here we are. We didn't close on EMA 50 because we are still on winning. We are seeking failure. The price went up much further until the price reached EMA 200. Here you don't have any choice but closing. Why? Because the market has closed here. This period has ended. What are you doing again? This period has ended here. So you have nothing to do anymore. You just have to close there. And with all of these selling and these sellings, mainly there, either you are in zero profits or slightly positive profits. If you have closed here, it's much better. But that's fine. Trading is not about one entry. Here we only have one entry. Okay? Take a look. I will be applying the strategy for the whole market. Keep it up. So the end of you is in this is the end of your entry is at the end of this period. Okay, which is here on EMA 200, or if you have seen that the market is making lots of profits there, or maybe there, at any time, just understand it, at any time you can quit. At any time. Once you see huge profits, you can quit. But if you want to apply it step by step, you will be waiting for EMA 200, and here you will be closing. Okay? So this is very clear. Let's delete it. Okay, we'll continue. So we have closed here, let's say on almost zero or some slightly positive profits. From there, the market, we have ridden this downtrend perfectly this whole phase. From there, a new phase, a new period started. So, price is close to EMAs, you do nothing. Price is below EMA 9, you start selling. Selling, 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 selling. Returned with positive profits. You don't close, you don't want winning. You are seeking the losing one in the right sense, of course. So you don't close here. Price went above. I think here you start losing from selling from there. So here you start losing. You close immediately with a slight loss here. Okay? And you wait for the market to get away from EMA 9 again, knowing that you are still in this one period. Okay? But since you have closed, you will be entering again, even though you are still in one period. So, here the price is a little away from EMA 9, a buy order here, but price reached EMA 9 immediately, so slight loss here. Then a selling one here with a slight loss there, and you continue. This one, the market is reaching EMA 200, so this period has ended, even though the market is away from EMA 9, so you should be buying there. You buy here and the price reaches EMA 9, so you quit with a slight loss. Here also buy, slight loss. Here also sell, slight loss. And also buy a small loss, buy a small loss. And here also buy a small loss, sell a small loss. As you can see, you will be losing a lot, and in one winning, you will be making a lot. Okay, that's it. So you have lots of losses, but each one is very small, it means it's almost zero. And especially if you are using a good account, the best account,